Hey everybody, Smart Silver Stacker here. Hope you're doing well. So it's a big day for silver. Silver has broken out. I want to talk today about how high this breakout could send the silver price, some of the fundamental factors, but mostly I want to look at some technical analysis today, which is going to tell us precisely how high we can expect this breakout to take us. Do me a favor, if you're in the live stream, welcome. First of all, put your forecast in the chat. You can just give us a price. You can, give us more than that if you want, but let us know how high you think the price of silver is going. Mark Royal in the chat says, will it stop? Well, I mean, at some point, sure, but I think it's going a lot higher before it does. So as you can see, I mean, we broke through the $30 level, and I didn't even get to do a video with silver at $30 because it blew right through 30 and drove right up to 31. Right now, the spot price of silver, $31.28. Now, look, I mean, we've been talking about this for some time here on this channel, this breakout, which is imminent. It has now occurred. The fundamental factors, I mean, I haven't seen any big news story that seems to be driving this. We did get the weaker than expected CPI reading earlier this week for April. I think that has something to do with this, some continued momentum regarding that. I see the price targets moving in here. Yeah, I think that those price targets that I'm seeing in the chat are pretty on point. The fundamentals here align for higher metals prices. That's the bottom line. Now, we got $34.7 trillion in debt. It's probably all going to get monetized by the Federal Reserve, by the printing press, so that's going to lead to higher prices for everything, precious metals included. Silver now up over 30% year to date with this rally. Think about that. I mean, that's a pretty good move thus far, but we're not done yet. We're really not, and we're going to talk about why. I'm going to show you, just applying common principles of technical analysis, we can see that silver is likely headed to $40 plus in the very near future. And, all the metals are higher today. Gold is back over 2,400. That'll be taken out all-time highs. In fact, I think it's very close to an all-time high right now. Platinum even putting on some gains today, although that's a really undervalued metal. I want to do a video about platinum in the near future because I think it is incredibly undervalued. And we're starting to see these industrial metals break out. Copper just took out a new all-time high. So, look, today's video is sponsored by SD Bullion. If you want to get your hands on some physical precious metals, check them out. That's where I buy mine. Right now they have a deal where you can get a Silver Eagle at spot. Of course, that's going to be over $30 now. But still, I think a great deal considering where we're heading. They've got $half on sale, 90% junk silver. This stuff, when people get an idea of what's going on here, I mean, junk silver in a mania. If you're like new to stacking, keep an eye on this stuff because when the mania kicks off and people start pouring in, and I mean, they're not really doing it yet. I think the physical metals, I mean, they're still in stock. The premiums are still low. Even though you're seeing the spot price break out and it's going to head much higher, I really don't think that the public at large is moving into these markets at all yet. So there's still time to be doing some stacking. In fact, I mean, now is really probably one of the best times to be a new stacker because we're on the verge of a huge bull market. We're at the breakout, right? So yes, I'm glad I was stacking, under $20 just, very recently by most measures here. And I wish I could go back to October and buy some more super cheap silver and gold. But look, now is a good time to be getting into the markets because now the breakout is almost guaranteed. I mean, nothing's guaranteed 100%, but I'm pretty confident that we are going to see much higher silver in the near future. So first, let's take a look at this chart here from TradingView, and then we're going to get into some technical analysis techniques here, which you may find helpful in this environment. So first of all, $30, very important psychological level. Why is it so important? Well, I mean, if you've been watching the channel, you know about this. If you're new, welcome, subscribe, smash that like button. That goes for all the regular viewers too, please, because I think this is important information to get out there. And when this information becomes mainstream, the price of the metals is just going to soar. But so $30, silver hasn't closed above $30 on a weekly chart since 2013. And I mean, we've got about 2 hours left of trading. I suppose anything's possible. I mean, maybe the monkey hammer, so to speak, comes out. I know people like to use that term regarding crashes in silver. Bottom line, if you ask me, is silver's just a volatile market. I mean, manipulation or not. It's a lot smaller than gold, and so it moves fast when it gets moving. By the way, I think the gold to silver ratio is now under 80. So silver is starting to outpace gold, and this is what you would expect as the bull market heats up. But we're very likely going to close above this $30 level. I mean, unless silver absolutely gets hammered in the next hour and change, we're going to get a weekly close above 30 bucks. That is very, very significant psychologically. $30 is a nice round number. We haven't been above it in over a decade, so this is big. This is big. But I also want you to draw your attention to this symmetrical triangle here. Now, we've talked about this before, but I don't think I've done the price target based on this. And we can go over to Investopedia here. You can see this is what a symmetrical triangle looks like. I mean, this is exactly the pattern that we are witnessing. I'm just going to get rid of this $30 line so you can see exactly what I'm talking about here. Now, I want to read a little bit about symmetrical triangles, and then we'll come back to the chart. So, symmetrical triangles explained. Again, this is from Investopedia, so this is, fairly common technical analysis techniques. This is nothing crazy. I think this is going to be a reliable chart pattern for us here when it comes to the silver price. Symmetrical triangles explained. A symmetrical triangle chart pattern is a period of consolidation before the price is forced to break out or break down. A breakdown from the lower trend line marks the start of a new bearish trend, while a breakout from the upper trend line indicates the beginning of a new bullish trend. So what we saw with silver back in April was a breakout above the upper trend line, okay, indicating the beginning of a new bullish pattern. Since that time, silver has broken out, run up to almost 30 bucks, come back down to the trend line, retested that. That has now become support. You can see how the price just bounced right off of that. Now, where is silver headed next? Where is the silver price going to go based on this chart pattern? Well, let's talk about how to derive a price target. The price target for a breakout or breakdown from a symmetrical triangle is equal to the distance from the high and low of the earliest part of the pattern, then applied to the breakout price point. For example, a symmetrical triangle pattern might start at a low of $10 and increase to $15 before the price range narrows over time. A breakout from $12 would imply a price target of $17. That is 15, the high, minus 10, the low, equals 5. Then you add that to 12, which equals $17. Okay, so let's go back to the chart. Now, actually, there's a great comment here. Nobody likes a $20 silver, but everyone loves a $50 silver. I do want to point out that there were a lot of naysayers in the comments in past videos, back here when silver was around, $20, when in October it went down to right around 20. And I mean, I was saying that was a huge buying opportunity. A lot of people were ragging on me in the comments saying that, silver's the most manipulated metal ever. I pointed out that was a good buying signal, that when stackers get negative on this metal, that means it's headed higher. It did. Now, I guarantee you that as the metal gets higher and higher, more and more people are going to be in love with this stuff, saying, it's to the moon. And it's when the bulk of the market is piling in at the end of the bull market. That's when you want to consider maybe some exit strategy. Could roll some silver into gold, maybe into some other cheaper assets. I mean, we'll have to see how it plays out. But that is very much in play. I mean, human psychology is a funny thing. But let's just pull out our handy-dandy calculator here and discuss what we just read in Investopedia, now that I'm done on my little aside there of vindication. So the lowest point on this consolidation pattern was back in the COVID kind of insane lows in March of 2020. Silver dipped down below 12 bucks, but let's just say 12 bucks because I don't think it ever actually went below 11. So here we go. $12 is the low, and then the high from the earliest part of the consolidation pattern is right here. This is actually just under 30, so we'll call it 30 bucks. So the first thing we need to do is we need to take the high and subtract the low. So 30 minus 12 gives us 18. This is according to the methodology, the technique described in Investopedia there. And then, whoops, let me fix this here. Okay, so you can kind of see where the breakout is on the screen. So the breakout occurred around $26. That is what we need to add this number to. So 26 plus 18, and that's going to give us our price target. It's very simple, really. So that gives us a price target of $44. So I mean, you can see how rapid the ascent from 26 to 31 has been. We could be over $40 easily by the end of the year. I mean, there's still 7 months to go, right? Or 6 months to go, I guess. We're in the fifth month. So, look, we're not even halfway through the year. The price is breaking out. I think that the run up to $44 and possibly beyond, because, I mean, this consolidation pattern was long. The fundamental case is so strong for the metals that we might see it really just like blow right back through that 44 target and go beyond that. What I will say is that, 44 I think is a safe bet, and then probably above new nominal highs. So, above $50. Silver hit 50 in 2011. But you do have to understand that there will be pullbacks along the way. This isn't going to be a straight run up to these prices. So it could be fast. It might take a little while. I have no idea. I mean, I don't have a crystal ball. I can't give you exact time frames for things. But on the way up to 44, there will be pullbacks, and those probably should be viewed as buying opportunities. Look, I'm not giving you financial advice, first of all. Not a financial advisor. Very important that I mention that. I'm just kind of giving you my thoughts from my own perspective and, what I think will be right for me. Maybe physical silver, getting into the silver space, not for everybody. You got to do your own due diligence on those things. However, it is looking like the odds of much higher prices is now very high. And I think that the risk is outweighed by the potential for gains at this point. And, we might not get a pullback for a while. So, you might be waiting now and saying, well, the breakout is here. I want to wait for a pullback. I know I do get a lot of comments like that. People saying they're going to wait for lower prices before they buy. But look, I mean, there may not be any significant pullbacks until we move much higher. Maybe we'll hit $44 before it pulls back at all, and then it drops down to 38. And it's like, well, you're probably going to wish you'd done some stacking at 31. So I think dollar cost averaging in is still a good approach. Of course, if there are any pullbacks or dips, assuming that we stay above this line right here, this initial breakout from this pattern, and this pattern is not invalidated, I think that any pullbacks likely will just be opportunities to get in before the bull run resumes, and it's looking like it's going to be a really, really strong run. Yeah, someone's Jigsaw Jazz in the chat here says, last time we went to $50, it was pretty damn quick. This time we don't come back. Yeah, that's very possible. I mean, the fundamental case here, remember, for silver is incredibly bullish, right? I mean, the deficits are hitting $2 trillion plus. The Fed is talking about cutting, even though interest rates remain, or rather inflation remains elevated. They're talking about cutting interest rates. We already know that they're slowing down quantitative tightening pretty soon. I think it's likely that they're going to be heading to quantitative easing very soon. But anyway, I mean, this is just kind of a short one to give you an idea of how significant this breakout could be and how high the price could go. And really, we are still in the nascent phases of this bull run. I think much higher prices are in store. If you're watching this later, leave me a comment down below with how high you think the silver price could go as part of this breakout. Let me know your forecast. If you haven't subscribed to the channel yet, consider doing that. Yeah, somewhat. That's an interesting point. Someone says in the chat, I bet this is all paper contracts going east to catch up with the price. Well, what's really fascinating is that yesterday, before we had this breakout, on the Shanghai Gold Exchange, the price of silver was already at something like $31.50 an ounce. I looked it up. You can go look at the Shanghai Gold Exchange. The way they list the silver prices there is they do kilos of silver priced in yuan. So you have to do some kind of math to figure out where things are in dollar terms, but you can figure it out. And yeah, the prices in the East, I mean, it's, why this is because China is loading up on physical resources, right? Physical commodities, probably because they have some more dumping of the dollar in store. I mean, they know where this is going. The dollar's been kind of weaponized. And in the East, they're trying to limit their exposure, and the way that they're doing that is not with more fiat currency, but by getting real hard money. And I think that's probably wise to follow their lead on that and get our own, secure our own access to these physical precious metals before the prices absolutely soar. You got gold at all-time highs, copper at all-time highs. Well, look at a periodic table. Silver's right between those. It's only a matter of time before silver is also at all-time highs. And the fact that it's not there yet, I think, presents a real opportunity. So again, let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker out.